Hi everyone, I am Suhas Mohan, your ACCA tax mentor at Being ACCA, and in this video, we will be discussing the Section B's first question of pre-June 2025 mock. Let's start off with the question. Morvin owns a sole trade business making candles, a standard rated supply for VAT. Her VAT exclusive total turnover for the year ended 31st March 2025 was 106,200. The input and output VAT for the business for the most recent 2 years is as follows. For the period ended 31st March 2024, the input VAT is 9,500 and the output VAT is 17,200. For the year ended 31st March 2025, the input VAT is 11,622 and the output VAT is 21,240. Morvin has never used any of the special VAT schemes but is considering registering for either the annual accounting scheme or the flat rate scheme. If she uses the flat rate scheme, her business would have a percentage of 11%. Morvin was la- Morvin was late submitting the VAT returns and making the VAT payments for the VAT quarters ending 31st June 2024, 31st September 2024, 31st December 2024, and with her most recent VAT return and payment for the period ending 31st March 2025 being made 7 days late. So that brings up a total of four late payments and late filings. So let's start with the question. Before we do that, let's identify what all are the important points that we can see from the case study that has been provided. So first, it says the VAT exclusive turnover. So VAT exclusive turnover is something that we will have to remember. Amount is 106,200 pounds. And the next is planning to enter into use annual accounting scheme or flat rate scheme. And the flat rate scheme percentage would be 11%. So this is what we will have to highlight. And we will have to look at these dates because there's no point of highlighting everything that we have. We'll only have to highlight some things, those that are most probable that we will not be remembering. These are the dates. So we can look at these and we'll be able to answer the questions. So, which of the following statements is an advantage of being in the annual accounting scheme? The advantage of being in the annual accounting scheme is that you get to pay your VAT only once during the year. So, we'll have to identify what is the right answer from the options provided. Once in the scheme, there is never a requirement to leave the scheme. This is not an option because you will have to leave the scheme if in the prior 12 months your turnover was 1.6 million, or if it is expected to exceed 1.6 million in the coming 12 months. So this is not an option. You will be asked to leave the scheme. Next, there will be fewer occasions when the penalties could be triggered. This is the most appropriate answer because you get a penalty every time you are late to file your returns. But here, since you're filing it on an annual basis, that means you will have to pay only if you miss it, there will be only penalty that will be applied once. So for that reason, this is a most appropriate option. But before we eliminate the others, let's have a look at them and identify why they might be wrong. The third option says there is no requirement to submit a VAT return. This is not at all appropriate because in irrespective of the scheme, the VAT return is to be submitted. The fourth option says the taxpayer can choose any number of installment payments they wish. Even this is not a right option because in annual accounting scheme, the most appropriate thing is the annual accounting would be done through 9 installments, but they can reduce it to max to 3 installments where they cannot decide how many installments that they want to pay it in. So this is not an option. The only option that could be is this. That is right. Is this. Going to the next question. If Morvin had decided to join the annual accounting scheme for the year ended 31st March 2024, what would each of her monthly payments on account have been? So, monthly payments on account will be calculated as a total on the total VAT liability into 10% is how we calculate it. So, because we pay 9 installments, each of 10% of the total VAT liability. So, since here we're discussing about the 2024 annual accounting scheme, so let's identify what the payment on account would be. So first, for that, we will have to calculate the net VAT liability, that is 17,200 minus 9,500, which gives us 7,700 into 10%, gives us a total of 770. So this is the option that we go with. Going to the next question. If Morvin had registered for the flat rate scheme for the VAT year ended 31st March 2025, what would her VAT liability have been? Morvin, so here we have to identify since is having a flat rate scheme, that means the VAT will be calculated on the VAT inclusive turnover and not the VAT exclusive turnover. So here, since it has been provided as a VAT exclusive turnover, we will have to calculate the VAT inclusive turnover and then multiply it with the flat rate percentage. So here we can see VAT exclusive is 106,200. Not 6,200. So the VAT 106,200. So the VAT inclusive turnover would be VAT inclusive is equal to 106,200 into 120 percentage. So that would be 127,440. So on this, we will be multiplying it with the flat rate percentage of 11% to get our flat rate VAT liability that we will be paying into 11%. So this is equal to into 11 by 100. That gives us a total of 14018. So that is what is our answer, 14,018 pounds. Going on to the next question. Which of the following statements about the implications of late VAT return submission and payment for the quarter ended 31st March 2025 is true? So here we are talking about the late VAT return VAT return submissions and payments. So we can identify there were three VAT payments that have been delayed before the 31st March 2025. So every time you have a delay in your VAT payment, you get one penalty point. And after summing up of total four penalty points from the next quarter, if you make any delays, that is when a penalty will be applicable. Here, if we can see 30th June 2024, there was a VAT return, delayed VAT return. So you get one penalty point here. And 30th September 2024, you get another VAT penalty. That is the second point. And the third is on 31st December 2024, you get your third penalty. And on 31st March 2025, you are getting a total fourth penalty. So because you have only had four penalty points, there is no penalty that you will have to pay at the moment. So anything that says amount that is to be paid is a wrong option. You can eliminate them. And the option that is remaining post that is the right answer. So here we can see a penalty of 800 will be payable. As we've discussed, it is wrong. A late filing penalty and late penalty payment will arise. No, this is also wrong. Next is any further late filed returns will incur a £200 penalty unless 12 months has passed without a late return. Yes, after four penalty points, if you miss your next VAT return or have a delay in that, that is when a 200 pound penalty will be applicable. So this is the most applicable answer. Even this option is to be eliminated because it says the penalty payment is due, but there is no due as of that date. Let's go to our final question in this question, in this case study. Which two of the following statements about Morvin's issuing of VAT invoices are true? Morvin has to include the name and address of the customer on a detailed invoice. Yes, in any detailed invoice, the name and address of the customer is a must. So this is a right statement. Morvin can issue a less detailed invoice for a supply totaling 250 before VAT. So here, until this point, it is true. You can issue a less detailed invoice for a supply totaling of 250 pounds. But after that, they're mentioning it is before VAT, which is where the entire answer changes. Only if the VAT inclusive supply is less than 250 pounds, that is when a less detailed invoice can be issued. That clearly makes this a wrong option. Let me just select the first one because we have decided that it is right. Moving on to the third option. Morvin does not have to issue a VAT invoice to a customer who is not a taxable person. Again, this is right. VAT invoice is only to issue to people who are taxable. This is also right. But since you have asked for two, we have got our two. But let's also see why the fourth option is not the right one. Morgan can issue an electronic VAT invoice even if the customer does not agree. This is wrong because an electronic VAT invoice can only be provided if the customer agrees or if we have the customer's consent. So that brings us to the end of our first question. Let's meet in the second question. And before that, I would always insist you guys to attempt your pre-mock and then only watch this video. So you'll be able to identify where you are going wrong and how you can correct yourself. Bye guys, have a good day.